Hi, this is Lara from Elliott Wave Forex with your free US dollar index Elliott Wave analysis for the New York trading session dated 31st of May. Starting this analysis, going back to some historical charts, first up back to 1985. This aqua colour, it's supposed to be aqua, that's cycle degree, and this maroon colour, it's supposed to be maroon, is primary degree. So we had a 5 waves down at cycle degree, followed by what's really clearly a 3-wave structure for an A wave at cycle degree, followed by an A, B, C 3-wave structure for cycle degree wave B, really nicely contained in these aqua trend lines here, drawn using Elliott's channeling technique. First up, from the start of A to the end of B, a parallel copy placed on the end of A, contains this downwards movement for wave B at cycle degree that ended early 2008. Thereafter, we've got a very clear, obvious breakout of this trend channel, and this chart's a little old. It should show some further movement to the upside here. Very, very clearly broken out of this trend channel, so cycle degree wave B is over and the next wave in the sequence, or C, is underway. So we're going to have a 5-wave structure to the upside for cycle degree wave C, a 1, 2, 3, 4, 5. When that's all over and done, a target for the upside for cycle degree wave C to end may lie about 141.08, so the dollar's got quite a long ways to go yet. Having a look just for the last 3 years, where this cycle degree wave B and this 1 and 2 at primary degree is this B back here with a 1 and 2 at primary degree, and we're working on primary wave 3 up. If I had put the B in, it would be just down here, sorry. So we had a 5 waves for 1, an expanded flat correction for 2 with an A, B, C, and we're working on primary wave 3 of the cycle degree wave C to the upside. Within this primary third wave, there's only one structure it can take, and that's a simple impulse. So we've had a 1, 2, and we're now working on some good strong upwards movement for 3. And then we'll have 4 that cannot reach down to this point here, and then we'll have another push up. A target for the end to primary wave 3, so this is a midterm target, may lie about 91.91 in the first instance, where it reaches equality with wave 1 at primary degree, Thereafter, it may get up to 102.87 if primary 3 in its entirety reaches 1.618, the length of this primary 1. Taking you now to a daily chart just for the last 6 months, where this black 2 and black 1 is this black 2 and black 1, and here's our recent dollar rises. We had a nice 5 waves up for 1, a really brief little ABC down for 2. If you're wondering why I've put this blue A here and not here, this B is an expanded flat correction. We had 5 waves for A to end here with an A, B, C for B, and then a 5 waves down for C to end intermediate 2. This piece of upwards movement is very, very nicely contained in a trend channel drawn using Elliott's channeling technique. In the first instance, a trend line from 1 to 3 and a parallel copy placed on 2. Tiny little overshoot in 4. There was a little overshoot at the beginning here of 1. Apart from that, it's all beautifully contained in this trend channel. This little piece is contained in a nice trend channel. I haven't drawn it here. But this piece of movement here also nicely contained in a trend channel that has quite a steeper slope than this piece. To contain all of this together in one trend channel that contains all of it just has too much empty space either above or below. So I'm using Elliott's channeling technique here quite strongly to tell me that this 1 black was over when we had a breach to the downside for 2 black. And now 2 black has clearly been breached to the upside, so the next wave in the sequence, wave 3 at intermediate degree, or black, is on its way up. So within this third wave, we've had a 1, 2, and a long expanded 3 with a 1, 2, 3, 4, 5, and now we're in wave 4 at blue or minor degree, with an A, B, which was a 99% correction of A, and now working on C pink down to end for blue. This is contained in its own little trend channel from the beginning of A to this high of B here, a parallel copy placed on the low of A, contains wave 4 blue so far. This may provide us with some guidance to where this upcoming downwards movement for wave C pink may very well come to end, maybe a little overshoot. Thereafter, when we have a breach to the upside of this line here, when we see a full day's bar opening and closing above it, that's going to give us a really good indication that 4 blue is over, and wave 5 blue, the next in the sequence to the upside, would then be underway. Taking you now to an hourly chart where this pink C and pink B is this pink C and pink B up here. So here's the end of that 5 waves up for minor or blue wave 3, with an A, B, C, a really obvious 3-wave structure for A pink, an AB and a long C for B pink, which is a 99% correction of this wave A. So we've either got a triangle unfolding for our 4th wave, or possibly a flat correction, a regular flat unfolding. If it's a regular flat, then the C wave is going to be a 5-wave structure, so we'll have 1, 2, 3, 4, 5. If it's a triangle, then wave C will unfold as a 3-wave structure, so we'll have A, B, C. That's why I've got A or 1 and B or 2 here. This piece of movement here is an absolutely perfect leading contracting diagonal. For a leading diagonal, only waves 2 and 4 must subdivide into zigzags, and in this instance, 1 and 3 and 5 have a very, very clear 5-wave structure, not 3-wave structures, so therefore it's a leading diagonal, not an ending diagonal. So if it's a leading diagonal, it's either in the wave 1 or A position, and it makes sense to consider it as a wave 1 position of a wave C. So that was my impetus for labelling this hourly chart as I have, and expecting that wave C to end wave 4 blue is actually not over. If this is a leading structure, then it's the first part of a structure that still has yet to unfold. So we've had a 5-wave leading diagonal for wave 1 within this C. We've had an A, B, C for 2, which may very well have ended here, or we could have some further exaggerated 3-wave movement, which cannot move above the start of wave 1 here. So our upside invalidation point is 87.38. Thereafter, a trend change for the dollar. If we do see a little bit more up, it's not going to be too much further, I expect. Thereafter, the dollar should start to move very, very strongly down for a 3rd wave to the downside. That must move beyond this point here, 85.91. We have to see the price for the dollar move below 85.91 and a reasonable amount below. Because when this 3rd wave is over, we're going to have a 4th wave to the upside that cannot reach into wave 1 price territory. 85.91 will then be our upside invalidation point. And then one more push down to the downside to end our 5 waves to NC green, to NC pink, to N4 blue. If it doesn't reach beyond this point here, then the triangle possibility will remain. If it reaches beyond this point here labelled A pink, then it's most likely to be over, and it would have been a regular flat correction. I have a target for the downside. The most likely end to this wave C pink is about 85.17, and that's where this wave C will reach equality with this wave A. If it's a regular flat correction for this 4th wave, it's highly likely for A and C to be around about equal in length. So if you're watching this video, you managed to find me. I'm on Elliott Wave Forex on YouTube, and our site is elliottwaveforex.com. Check it out. That's all from me with your free US dollar index Elliott Wave analysis. I hope you find that useful in your trading, and I hope everyone out there has a most awesome day.